What's up, my friends? What is happening? We are live. We are talking recession. We're talking how to win big in the recession. So I'm excited to be back, guys. It's been a little bit of time. Let's let everyone jump on here to the show. Let's get our comments going here. Comments and reactions. There it is, my friends. Hello. Welcome to the show. Welcome back. It's probably been about a week, so I'm excited to be back on the live here. Here we go as I see everyone jump on. Thank you, guys. Good afternoon. Dima show is live. We're talking how to win big in a recession. I'm going to give you my 3-step game plan. We're going to talk about a lot of different things today about recessionary stuff and what happens in a recession and how you can win big. Because guys, here's what I have to tell you. Most fortunes, well, I don't know about most, a lot of fortunes, a lot of wealth is built during down markets, during recessions, because what naturally happens, guys, is human psychology goes something like this. When something's going up, everyone gets excited, they start investing, and then what happens? It comes back down. And when it starts coming back down, everyone gets scared, everyone panics, everyone is afraid, and then everyone sells and goes, oh, that didn't work out. But the smart people, the smart money, the people that are able to build a ton of wealth actually do that in reverse order. When something is down, when it's at the bottom, that's when they buy, that's when they invest, that's when they take advantage of the situation. And so guys, we are going to go over my plan, my game plan. I'm just going to give you my exact game plan for this and what I'm doing right now. I'm just fully transparent. Share with you what I'm doing, what I'm focusing on right now during this time period right now. So I'm typing into the chat box comments and questions here. If you have comments or questions, guys, let's hear them. Throw them in the chat box. I would love to hear from you. I'd love to chat with you exactly what you're thinking. If you have questions, if you have things that you want to chat about, just throw them in there and we will talk about them on the show today. So let's start with, guys, what is a recession? A lot of people will say, they'll hear this stuff, they'll hear about recession, you know, are we in a recession? Are we going into a recession? Traditional definition of a recession, guys, is 2 straight quarters of negative GDP. 2 straight quarters of negative GDP, or that would be 6 months of negative GDP, right? And what is GDP? You know, I use that phrase a lot. A lot of people will say, you know, what is GDP? Because sometimes we talk about it, but we don't actually go into it. So GDP is the gross domestic product of the country. It is a combination of all of the funds that are spent, of all the money that's spent, of everything that's happening in that country, right? So we look at GDP and we see like what is happening, right? And so it's a measure of the country's, really of the country's value, their income, everything that has to do with that country. And so if you see 2 straight quarters of negative GDP or 6 months of negative GDP, in traditional terms, that is a recession. We have had 1 quarter of negative GDP, and I was trying to pull up the chart for, I believe it was negative 3%. GDP, US, GDP by quarter. Wanted to show you that. Just so you could see, right? So as you can see, let's see here. There it is. Boom. Let's do a little screen share. Let's have some fun here today, guys. All right, so little screen share. I'm showing you the wrong stuff, though. What I want to show you is the other Google Chrome window. So here we go. Okay, so check this out, guys. So here's GDP from the preceding quarter. Boom, okay. And let's just zoom in a little bit. Here we go. So here's GDP, right? So we had 2020, Q2, we had a big negative GDP number. You could probably guess what that was. That was the pandemic. Then obviously we turned it right around and had a huge quarter because we had all those bailouts, stimulus, all that kind of stuff. Since then we've been pretty positive. First quarter 2022, here it is. Negative GDP, I think it was about 3.4%. So the second quarter of 2022 is going to be interesting. That's where we're going to see, you know, what is the GDP now? Are we back up or are we still negative? If we're still negative, then technically speaking, guys, that would put us into a recession by definition. But there are a lot of factors, guys, that would say that we're actually in a recession now. We got super high interest rates. We got extremely high inflation. Let me back up. When I say super high interest rates, what I actually mean is they're higher than they were. So mortgage interest rates were, 3%, less than 3%. Now they're above 5%. So they're higher than they were. Historically speaking, that is not terribly high. Inflation, though, is terribly high. And that is causing a lot of problems because it's causing increase in prices, devaluation of the dollar, meaning we're paying a lot more for everything. Gas is through the roof. I'm in Texas, guys. I just filled up my tank on my big Escalade and it was like $120. I haven't seen that ever because the gas is super expensive here. When we moved to Texas about almost a year ago, I think gas was like $2.60. Now it's like $4.50. So it's up almost $2, almost doubled in that time period. So we're seeing all of these things that would cause us to believe, hey, we are in an inflation, we're in inflationary times, things are not looking good for the US economy. So during times like this, guys, what do we do? What do we do as entrepreneurs, as business owners, or maybe as employees who are trying to start businesses, and we want to make sure that we not only survive the inflationary period, survive the recession, but we thrive in it and we come out of this on the other end on top. And so what I want to give you today is my 3-step plan, and I'm actually going to give you a little bonus, 3 things that you should be focused on right now during this time period. So if you have any questions or comments, guys, throw those in the chat box. Let's go ahead and talk about them. So number 1, we have to talk about the stock market. So the stock market, guys, has been doing some interesting things. And I pulled up for us the S&P 500 index. And what the S&P 500 index is basically the 500 biggest companies in the US, or actually might even be some international companies in there, but the 500 biggest companies. And let me show you something on here. So let's go to screen share. Here we go. Whoops, did the wrong zoom there. Here we go. Okay, so today it's up 1%. If you look at it year to date we are down 12.6% year to date. So we were all the way up here, boom, now we're down here. We have seen a little bit of an increase. We were down almost 18% just a couple weeks ago, and now we're catching up. And that actually is part of my point. And part of my point is that the US stock market is basically a representation of the US economy, okay? And so the question you have to ask yourself is, are you gonna bet on the US economy recovering and eventually thriving? And if your answer is yes, then the game plan I'm gonna give you is a long-term investing game plan, okay, long-term. The reason I say that, guys, is that so many people are short-term thinkers, right? And so if you look at this year to date, someone might look at this and go, oh, well, shoot, the stock market's down, 12%, it was down 18%. It's a terrible year for the stock market. What I always like to do is let's zoom out and let's go on a different chart. I think the Google chart's actually better. So S&P 500. So check this out, guys. So if I show you this chart, which is better, right? Boom, boom, right? Let's check this out. What I like to do is actually zoom out. So here's the year to date. Again, it's down like 13%, right? But watch this. If I go back a year, just 1 year, not even that long ago, we're basically flat, right? We went all the way up here, we came all the way down, but we're basically flat. Now watch what happens when I zoom out to 5 years. When I zoom out to 5 years, we're up 71%. So if you invested your money in the S&P 500 5 years ago, you're up 71%, current fluctuations notwithstanding. And what people like to do with things like the stock market or real estate, which we're going to touch on later, is people like to try to time them. They look at short-term horizons when we should be looking at a long-term horizon on this. If I zoom out even further, back to, we can go back to maybe even the dot-com bubble of 2000. 2000, S&P was at 1,400. It's now, what is that, about 3 times as high, right? And so if you take a long-term view of the market, what you come up with is the fact that if you bet on the US economy, you are pretty sure to do really well over the long term. And I say this all the time, it's not timing the market, it's time in the market. And so if you bet on the US economy, right, and if you say that, hey, over the long term, I think the US economy is going to do well. Blaine, good afternoon. Thank you for joining me here. Different time today, not the morning, but good afternoon. And so if you bet that the US economy is going to do well over the long term, then investing in the stock market over the long term is a good bet. Now, you may say, hey, I'd rather invest in the NASDAQ, which is more tech related, okay? Or maybe you want to invest in the Dow or whatever it is, index funds, okay? Ultimately, though, part of my plan in the stock market is investing in index funds, which are a basket of companies, because my belief is unless you want to be a trader, unless you want to really spend your time analyzing companies, their financials and all that kind of stuff, then don't try to pick individual stocks, because it's a scary proposition, right? You could pick a company that doesn't do well when the rest of the sector does. And so my advice is, and again, guys, caveat, this isn't financial advice, this is an entertainment video, of course, just giving you my perspective. So my advice is invest in index funds, because that'll buy you a basket of goods and services of companies, and pick what you like and invest over the long term. And the best time to do that, guys, is actually the best time to start is in a recession, because things are down. I mean, look, let's go to, for example, let's go to the NASDAQ, right? So let's share the screen again. NASDAQ, okay? So when I look at the NASDAQ over the last over the last year, when would have been, oops, you guys can't see that. Let me scroll up. There we go. When would have been, let's say I can go back in time. I got the DeLorean from Back to the Future. When would have been the best time to invest over the last year? Well, it would have been a couple weeks ago. May, let's see, what was our low point there? May 24th, somewhere around there, 11,400, 11,200 is where the NASDAQ was. That would have been the best time to invest in the stock market. But could you have really predicted that for the NASDAQ? Probably not. But look, if you would have just dollar cost averaged your way in over the last year, you would be fine. You know, this last portion, you'd be down a little bit. I mean, the high was November, but if you started last June, you started buying at 13,000, ran it all the way up to, what is that, 18,000? What was the high? 15,000, I'm sorry, 16,000, all the way back down to 11. This is the NASDAQ if that's what you choose to do. So bottom line, guys, on the stock market, don't approach the stock market as a get-rich-quick scheme, as a casino. What you want to do there is you want to buy and you want to dollar cost average your way into a position in either NASDAQ index fund, S&P, or both. And that's what I'm doing. That's what I'm doing myself, because that's what you want to be doing with these kinds of investments. It's time in the market, not timing the market. Now, you might be saying, hey, Dima, look, this isn't going to make me wealthy today. You said you're going to show us how to build wealth in a recession and come out of this and thrive. Yes, that's exactly what I'm going to tell you. This may not make you rich today, but over the long term, this will build wealth for you. And starting in a recession is actually the best time, because that is when the markets are down, right? So if you start when they're high, like if you would have started up here, not as good. Down here is better. So that's stock market. That is item number one. I get asked about that all the time. And so I wanted to make sure to go through and talk about the stock market. Whoops, wrong button. Second thing we're going to talk about today, and this is my favorite asset class, of course, and that is real estate, guys. We're going to talk real estate. So real estate. I'm going to take you back in time. I started in real estate in 2006. And if you guys all remember what happened in 2007, there was a big real estate crash. And what led to that crash was really the subprime housing market, subprime lending market. And what happened there was essentially in the 30-second rundown, people were getting loans that they shouldn't have been getting. Those lenders were taking those subprime loans, packaging them, selling them off as good loans that would never default. Those started defaulting. People had no equity because they were getting these 100, 110% loans. They just stopped paying, walked away from those houses. That led to a lot of foreclosures. And ultimately, real estate's all about supply and demand. If you dump a bunch of supply into the market and then they stop making loans, so now the demand is lower, you have an imbalance, and then that causes prices to plummet. That's exactly what happened in 2007, 2008. Now, with real estate, guys, whenever you see blood in the water, you need to think about buying real estate. If I could go back in time to 2007 through 2009, I would do everything I could. I would beg, borrow, and steal to buy every property I could buy. Let me show you something pretty cool. Check this out, guys. So this is median home price. Median home price, right? And I'm going to show you, I'm going to zoom in on this and I'm going to show this to you. So 2000, here we go. So we had this big run up. Oop, I went a little far. Oh no, I didn't go far. Okay, we had this big run up, right? From 2000, I did go a little far. Boom, okay? So we had this big run up from about 2000 all the way to 2007. Median home price was at $257,400. It peaked in the first quarter of 07. And then watch this. It went all the way down to $208,400. That's nationally. A lot of local markets did even worse. A lot did better. But there were markets that were down, 50% on prices. So you could have picked up properties at a big discount from, here, 2008 all the way till about 2011. And then things started to pick up again. And then look at this big run, right? From 2011, we were at 221,000. 10-year run, or sorry, 6-year run to 2017, 337.9. Then we saw a little bit of a downturn and then back up. And then we saw again this huge run here to 428. So you could have picked up properties that are now, triple the price, quadruple the price, whatever it is. And so if I could go back in time and I could buy everything I could during this time, I would. And the reason I'm saying that, guys, is that the housing market, just like the stock market, recovers. It recovers, and it recovers pretty quickly, actually. From the low point in 2009, Q1 2009, the low point, we were back above the high of before of 257, okay, by Q1 2013. So it doesn't take a long time, a couple years max, right? Reva's on. Hey, Reva, how are you? And so guys, the point of this story, the moral of this is that when there's blood in the streets, buy, right? And so I'm not saying that the real estate market is going to crash right now, because I actually don't think that's going to happen. My prediction on this, my analysis, is we are starting to see a little bit more supply coming on the market. We're definitely seeing less demand in most markets because interest rates are 2% higher than they were. That means people are less likely to qualify, or they're qualifying for smaller loans. And so because of that, right, you are going to at some point start to see deals. And when you see those deals, if you see some downturn in the market, that's the time to buy, because it's not going to last. And the real estate market always recovers. So right now is a time for you to set yourself up for success for real estate. Set yourself up by gaining the knowledge, by gaining understanding of the market, of your local market, of what you want to do and how you're going to capitalize on this. That might be, maybe you want to start investing in real estate. You got to find some investors. Maybe you need to build your credit. Maybe you need to develop relationships with lenders. Whatever it is you need to do to get into the real estate game during any kind of downturn is the time to do it. Because again, if you look at this, and let's go all the way back. Let's go back to 1965, guys. Anytime there's been a little bit of a downturn, a little blip, boom, back up. Little blip, boom, back up. Big blip, boom, back up. What are we going to see here? Yeah, we'll see. We don't know yet. But whatever we see, guys, I know that whatever this ends up looking like, it's going to go higher in the future in real estate in America, right? And so make sure that you're tuned into the market, whatever it is that you want to do in real estate, that you are ready for any kind of downturn, and you're ready to thrive in a recessionary or a downturn environment. Because then when you look back, that could be you that in 2009, 10, 11 bought up a ton of properties, built your wealth, and then a couple years later, you're sitting on a lot of real estate. So the real estate game is another thing that you can do. We've talked about the stock market, dollar cost averaging in. We've talked about real estate, getting ready to take advantage of market conditions. All right, getting ready to take advantage of market conditions. The third thing I want to talk to you guys about, if this is something that excites you, is cryptocurrency. So cryptocurrency has also, and let's get away from this screen here, sorry guys. So cryptocurrency has also experienced a big downturn, and I'm going to show you some charts on that, of course, as you know. So let's go back. All right, here we go. So let's take a quick look at Bitcoin, right? So Bitcoin over the last year has experienced a lot of volatility, a lot, right? And so, we were here at, 36,000 or whatever. This is a year look, ran all the way up to 67, I think was the high. We're back down around 30,000 right now. And if you look at cryptocurrency, let's go back even more. Every time we've seen a downturn in crypto and Bitcoin, I'm using Bitcoin because it's, the big one, but every time we've seen a downturn, we've always ended up going much higher. Now with crypto, sometimes it takes a little longer. So if you look here, 2017, we had a high. We went all the way down to 2018, okay, all the way down. And then it took a while. It actually took a really long time because this uptick right here where we went to 16,000 was in 2017. We didn't see that number until 2020. So that took about 3 years to recover. But watch, every time here we had these little dips, right? And they weren't that little at the time, but every time we had these little dips, we recovered, dip, recover, right? Here, dip, and then we went higher. This one, we're having a dip, we don't know what's gonna happen. But guys, if you believe in cryptocurrencies, what I would say is same thing that I would say with the stock market, and that is dollar cost average your way in. I use a company called Swan Bitcoin, links down in the description. And what you could do with Swan is you could dollar cost average your way into a position in Bitcoin. They will take out whatever number you pick, so it could be any amount. They will deduct that from your account. They'll buy Bitcoin every day or every week or every month, depending on what you want, so that you don't have to worry about all this crazy volatility. I'm a big believer in Bitcoin. I wasn't before. I've told this story many times. Before the pandemic, I was actually not a believer, but now I am, because I believe in the decentralized nature of it, unregulated, government can't just print more money, limited supply. I really like all those things. And so I'm a big believer in it. And for you, you just have to decide if you are. The way to do it is the dollar cost average approach. Don't try to time the market. It's impossible to do. If you want to be a trader, okay, that's fine. I don't want to do that. That's not what I want to do with my day. And so I just dollar cost average my way in. And so that's number 3, guys. So we've gone through a couple things. Stock market, we've gone through real estate, we've gone through crypto. Now you might be saying, Dima, come on, what about the get rich quick stuff? Well, I'm not a get rich quick kind of guy. Everyone I've met that's made money, it's been over the long term. And so if you have a long-term horizon over this, you are going to do really well, and you're going to come out of any recessionary period doing really well. But I do want to give you one bonus tip. And the bonus tip on what to do to thrive in a recession is invest in yourself and take the time to gain knowledge and expertise in something. It's a great time, guys. Whenever there's a recession, whenever there's a down market, whenever there's a down period, people get scared, people panic, people freak out. And that is precisely the time when, if you can have a cool, calm head, if you can take advantage by learning a new skill or a trade or understanding something that you could teach to someone else, that is the time period where you are going to do very, very well coming out of it. Because when you come out of it, now all of a sudden you're seen as the expert and everyone flocks to you. There are so many people that during the last recession, no one had ever heard of them before. And then after the recession, all of a sudden they're, celebrities or gurus or whatever it is. And so take the time now during a down market, guys, to really step up your game in all these different areas. Guys, if you have thoughts, if you have questions, if you have comments, I'd love to answer them. Just throw them in the chat box. We're talking about how to thrive in a recession. And we've talked about the stock market, we've talked about real estate, we've talked about crypto, and we've really talked about investing in yourself, which I will honestly say might be the most important one out of all of them, because you can lose your money in the stock market, you can lose your money in real estate, you can lose your money in crypto for sure, but what you can't lose is the knowledge that you gain by investing in yourself and developing a skill or a trade or something that you are going to do. And so guys, I hope you enjoy this type of content. It's all positive stuff. It's all good stuff. I'm done with the doomsday stuff, man. I got to tell you guys, one thing that we've been doing on the channel is talking about what's the future, what's the direction of our channel. And the direction of my YouTube channel is really to help like-minded, freedom-loving entrepreneurs and other people gain the knowledge and help people and build their businesses and do it in a way that helps you with your family, with your business, and achieve the goals in your life. There's a lot of people out here giving all kinds of doomsday stuff. That's not what I'm about. I'll give you the facts. I'll give you my analysis. If that involves a little bit of a downturn or something negative, I'll tell it to you. But I want to focus on the positive. I want to focus on what we all can do to help ourselves improve, build wealth through all of these channels and mediums. So I want to thank you for tuning into these lives. If you like these, let me know. I'll do more of them. And also make sure you subscribe so that you get notified every time I release a new video. I got a really good video coming out tomorrow morning. Don't miss that one. It's all about more stupidity and nonsense coming out of California. And on that note, guys, usually these lives are in the morning. It seems like that might be a better time to do it. So the next one might be in the morning again. We kind of fit this one in because I wanted to chat with you guys. It's been a while. Thanks for tuning in, guys, and I'll catch you on the next one.